Hey everyone, and welcome back. Today's video is going to be a breakdown and analysis of the first quarter 2021 results from Thor Industries, which is my biggest investment if you've been following the channel, as you would know if you've been following the channel for quite some time. And yes, they are one of those weird companies that reports their first quarter of the next year in the previous year. So we are already seeing data for the 2021 financial year for Thor Industries, and the results were just so impressive that I wanted to break it down and discuss it with you guys on the channel in today's video. So what we're going to do is we're going to go through the press release. I'm going to talk about some of the major things that I focus on when a quarterly report and a press release comes out so that you can get some value out of this, even if you're not invested in Thor Industries, which is probably most people. So if you're following along and you have no interest in Thor Industries at all, you can still get a ton of value out of this by seeing what I'm looking at when I'm looking at a quarterly report. And then you can apply those same things and look in those same areas and analyze businesses, analyze pretty much any business that you have in your own portfolio in a very, very similar way. If you enjoy these kinds of videos where I break down a quarterly report, then make sure you let me know by leaving a like on the video, hitting subscribe, of course, if you want to see more content regularly like this, and you can let me know your thoughts down in the comment section below, and I'll be answering questions as this video goes live as always. But with that said, let's jump into the video. When a company releases their quarterly results, there's a few different documents that you will get access to. The first is the press release, which is just really a summary of the results that have happened for that business during the quarter. And then you will also get access to sometimes an investor presentation. So that might be a PowerPoint slide. We have one of those for Thor Industries. You will then get, if it's an American business, you will have a 10Q that comes out, which is the quarterly report that is filed with the SEC, or if it's an Australian business, you will have a half-yearly financial report. And one thing to mention is that the official 10Q or the official financial report sometimes comes out a little bit later than the press release. So for some companies, they will announce their results, share some highlights, and then about a week or two later, they will actually make the filing with the SEC and file the full report. So if you're looking at the press release and you're trying to find the quarterly report, the official report, you might not be able to find it because they haven't filed it yet. In this case, Thor Industries releases everything at the same time, so we get access to everything. And the first thing that I typically do is I typically go through the press release, because in the press release, we will usually get a quick note from the CEO or someone on the management team describing how the quarter went, which is super important to me, especially in businesses that I own where I deeply trust the management team and what they're conveying to us as shareholders. And I'm also interested in the press release because usually at the top of the press release, there will be a few dot points that are classified as highlights or something like that. And this will give us a very quick snapshot of the performance of the business, because it is within those small dot points that the management team puts at the top of the press release that we will usually see the key business indicators of the company. And for those who don't know, a key business indicator is something that is contributing to driving the business forward in the future. It's the factors that we use to estimate future cash flow. So it can give us a quick snapshot, a quick view at the performance of the business in a number of different important metrics. For Thor Industries in the quarter, the first dot point is about their sales. So sales in the first quarter was $2.54 billion, which was an increase of 17.5% over the same quarter in 2019. First quarter results include $1.89 billion in North American RV sales and $602.5 million in European RV sales. Now, of course, this is incredibly impressive. They were able to not only beat their 2019 results in a recession year, which is typically a year where an RV company will struggle because it's a kind of a discretionary spending that people pull back on, like holidays and that sort of thing, when they're strapped for money. So typically, Thor Industries has a terrible year during a recession year. But it's been the nature of the pandemic that they have benefited from, a shutdown of flights, other travel restrictions, and people just being more cautious about how they choose to travel. And all of those things have contributed to the RV industry in the US overall and in Europe as well, benefiting substantially. And we can see this quite dramatic shift in the demand for RVs in the US. If we look at something like the RVIA.org's data for the US RV industry. So taking a look at the data, you can see that at the beginning of of the year, 2020 was stronger than 2019. In January, it was pretty even in February. In March, we saw the first weakness. In April, we saw a huge amount of weakness as a lot of manufacturing centers were shut down. Same in May. But then after that, after the centers were back open and after people were back out spending money, you can see that throughout the year, 2020 has consistently become stronger and stronger than 2019. And in that graph, you can see the July month is the most dramatic. That July month in 2020 was actually the best month for RV registrations and RV sales in the US in the history of the RVIA, which has been going for about 40 years. So then moving on to the next dot point, they talk about gross profit margin, which is of course very, very important. It's not just enough for them to be increasing their sales, but they need to be reducing their costs as well so that they can increase their profits at a huge rate. So consolidated gross profit margin for the first quarter was 14.9%, which was a 60 basis point improvement over the prior year period. And then just below that, net income, so their profit after all of their expenses for the first quarter increased 122.8% to $113.8 million or $2.05 per diluted share. Now, their profit figure is certainly impressive. I think it was in line with their best quarter or their best first quarter ever. Their second and third quarter are usually their strongest. So it was in line with their best first quarter. It's probably, I think, nowhere near, or it wasn't very close to their best quarter ever. But it is also a little bit misleading because their 2019 number was held down by some acquisition related costs. So it looks like 122% increase is huge and that's fantastic. But really the increase was probably going to be something more in line with the sales increase if we excluded those acquisition and other one-time expenses. And then the last dot point that management shows us here, I think is probably the most exciting, especially if you're invested in this space, whether you're in Thor Industries specifically, or whether you're in some other large business in the space, is the RV order backlog, right? So order backlog happens because, of course, it takes time for these manufacturing centers set up by Thor Industries to produce RVs. And typically they don't take that long to produce. I think it was about 2 months was the typical lifetime time for them to produce an RV if there's no supply constraints, if there's no limit on their manufacturing facilities. But these backlogs do happen when these businesses like Thor Industries reach maximum capacity and there is a substantial amount of demand. So it's in those circumstances where you will see this backlog rise as Thor Industries just cannot make enough in order to meet the demand. And that is something that is happening at the moment, which is very, very exciting and is looking very promising for the remaining quarters of 2021. Consolidated RV backlog as of October 31st, 2020 was $8.92 billion, an increase of almost 200% over the previous year. Now, as I mentioned, if we just exclude the idea that Thor Industries has manufacturing capacity, right? They can't just manufacture $9 billion worth of RVs in the next week if they wanted to. But if we just exclude that, typically backlog is a good representation of the sales for the business over the next 2 months, right? So typically we can use it as a good indication of demand in the near term. And that's actually what drove a significant decline in the stock price in 2018 was the backlog dropped off substantially. It basically went to zero because dealerships had enough inventory and traders and short-term investors basically took that as a sign that the business was going to struggle, which it did, and everyone got out of the stock. But when you have a circumstance where the backlog gets this high, where it's at $9 billion, we actually don't know how long it's going to take Thor Industries to fill these orders. Because, for example, 3 months ago, when we saw the backlog 3 months ago in the previous quarter, the backlog was at about $5.5 billion. Now, since then, they have been able to deliver and produce and deliver about $2.5 billion worth of RVs, yet the backlog still went up about $2.5 billion. So what that means is, let's say Thor Industries had made no RVs in the last 3 months. Let's just say they shut down capacity, but the demand still came. Then they received orders of about five and a little bit over $5 billion in RVs, yet they could only manufacture about half of as many. So that's kind of the situation that Thor's in at the moment. They're trying to expand their manufacturing capacity to just meet the demand because if they had the capacity to produce $9 billion worth of RVs in the next quarter, then it would be by far the greatest quarter they've ever had. But it's probably not going to happen because there are those limitations. With that said, one of the main reasons why I was attracted towards Thor Industries was because of their variable cost structure, which basically means as demand shifts in the industry, which does happen very, very quickly, as we've seen over the past couple of quarters and we've seen previously, Thor Industries is one of those businesses that is able to, has systems in place that allows them to increase their capacity to accept higher levels of demand. And when demand drops off, they can quickly reduce their manufacturing capacity to reduce their costs. A typical RV company struggles to do this year by year, and it's why a lot of RV companies actually go bankrupt during a recession, because they're making a ton of RVs, then a recession hits and there's no more demand for RVs, and most RV companies can't shut down their factories. Most of them have some debt, and then they get into a lot of trouble that way. Whereas Thor Industries has never had a year where they lost money. And the only way you're able to do that in a highly cyclical industry like this is if you can quickly reduce your costs, reduce your manufacturing facilities when there is lower demand. But it's just as important to be able to do it on the upside when there is a sudden increase in demand like there is right now. Throughout the rest of the press release, you get the detailed examination of the different components of their business. So taking a look at towable RVs versus motorized RVs in the US, and then doing the same in Europe. I probably don't have time to go through all of the details, but one thing that I was really happy to see was that the European segment of their business was performing really, really well. So it wasn't just that there was a significant amount of demand in the US. They're also seeing a huge increase in demand, a huge increase in backlog and sales overall in their European segments, which is a very, very positive sign for the new part of their business that they just acquired in the past couple of years. We also found out this quarter that the RVIA, which is basically the research firm and the data center for RV businesses in the US, gave a forecast for the 2021 financial year, calendar year, and they expect an increase of about 18.7% in RV sales throughout 2021. So assuming Thor Industries doesn't lose or gain substantial market share in the US, then you would expect them to grow within that range. And that is obviously a very, very positive sign. It's well in excess of what my expectations were for a year after a significant recession. And maybe that doesn't play out. Sometimes these forecasts don't happen. Actually, a lot of the time, these forecasts don't end up happening. So I'm not putting too much weight on this in particular, but it's certainly positive to see. And it certainly means that Thor Industries is well on track to deliver me how much cash I expected when I've been investing in this business over the past couple of years. And that's ultimately what matters to me, right? When these quarterly reports come out, I know that sometimes they will be really positive, sometimes they'll be really negative, and that kind of happens on a quarter by quarter basis. I don't read too much into it, but I'm certainly happy when I can see that the business is more or less on track, or in this case, more on track to deliver me the cash that I expected out of this business. Because when I'm figuring out what price to pay, remember, I have an expectation of what the cash flows of the business will be. So if the business underperforms that expectation, then I would have overpaid for the business originally. So that's what I'm keeping my eye on, is the business on track to deliver me the cash flows? And there's many years left before I'll be making that assessment. I look at businesses over a 10-year period, and I've had this investment for, I think, just about 2 years, and I added to it substantially this year. So there's a long way for Thor Industries to go, but certainly this is one of their more positive quarters, and I'm very, very happy about it. So I hope you guys enjoyed today's video and got some value out of it. As I said at the beginning, let me know if you want more videos like this covering other businesses that I'm invested in and that are on my watch list. And if you have any suggestions for businesses you want me to cover, then of course you can let me know down in the comment section below, and I'll be down there answering comments and answering questions as this video goes live. But other than that, hope you guys have a great day, and I'll see you in the next video.